Tennessee's housing market is on the verge of collapse, with inventory, price cuts, and days on the market surging into a housing market that is tremendously overvalued. With home prices in Tennessee 32% overvalued compared to their long-term historical norms, with a typical home price of $312,000 today compared to a fair home value of $213,000. Now, will home prices in Tennessee drop by 30% over the next several years? I think in certain cities it could, particularly an area like Nashville. Because in Nashville, the inventory on the market for sale is up 22% year over year. We can see this inventory is now back to pre-pandemic levels. So there's no longer an inventory shortage in Nashville. To go along with that, the days on the market, how long homes are sitting on the market, has surged back up also to its long-term norms, which is now causing a lot of sellers to get a little antsy and to start cutting the price. If you go on Zillow right now in Nashville, you can see lots of price cuts across the market, particularly to the area south of Nashville, which is one of the highest income areas in America. We're seeing listings like this 4-bed, 2-bath in Thompson Station get a $21,000 price cut to $450,000. You can see the value of this pretty nice house is already back to its level in early 2022 and could have further to fall. Ultimately, one of the big issues in Tennessee right now, whether it's Nashville or some other parts of the state, is overbuilding. The builders in Tennessee pulled lots and lots of permits for both single-family homes and apartment properties over the last couple years, especially during the pandemic when all those people moved to Tennessee. They were fleeing states like New York and California, and they came into Tennessee and they pushed the prices and the rents up. And the builders, well, they went crazy, pulling up to 58,000 permits in 2021. That's an all-time high. And while that permit level has gone down over the last year, it's still at an elevated level, which means we're going to continue to see newly completed homes and apartments hit the market over the next couple years of this downturn. Now, here's the funny thing if you're a home buyer investor in Tennessee. Lots of people who live across the state haven't noticed yet that the market's in a downturn. I actually happen to live in Nashville right now, and when I talk to locals, they keep saying things like, so many people are moving to Nashville, which is really yesterday's news because there's been a big slowdown in people moving into Tennessee, which is causing home sales to go down, inventory to go up, and price cuts to go up. However, folks, there's big differences across the state. In particular, if we go on Reventure app and look at inventory growth across Tennessee, what do we see? Well, Nashville inventory is up 22%, indicating fewer buyers. In Memphis, inventory is up 33%, indicating even fewer buyers. However, if we were to go to Knoxville on the eastern side of Tennessee, inventory is still down 10%. Inventory is also down in Morristown and Newport and Johnson City. It's down in Cleveland. So the eastern side of Tennessee is actually still holding strong as a housing market, with the home prices still appreciating by a lot. They're up by 9% in Johnson City year over year, 13% in Greenville, 7% in Athens. So eastern Tennessee is still holding on, while central and western Tennessee is going down. But eventually this downturn is going to spread across the state because Tennessee's housing market is just way too expensive right now for the locals to afford. And this is the important thing to understand, is that now that we've exited this peak pandemic boom period of people moving, it's more and more of the local home buyer in a state like Tennessee that's going to have to support the market. And the trouble is that the local buyers, they don't have enough money to afford today's prices. For instance, if we were to zoom in on Chattanooga in the southeastern part of the state, you're going to see like more and more price cuts in a place like Chattanooga, particularly on a listing like this north of the city, which is on the market for $600,000. Now, they just did a $50,000 price cut a couple weeks ago, but this property is still pretty overpriced because the buyer here would need to cough up $3,800 a month in terms of their mortgage, taxes, and insurance to afford this property at today's interest rates. And that's a payment that the locals in Chattanooga can't afford. Because the area's median income in Chattanooga is $62,000 per year. And yes, Chattanooga, it's a beautiful metro. It's a beautiful part of the country. I've spent a lot of time there. However, there's not a whole lot of industry there, not a whole lot of high-paying jobs. And now that the influx of people has slowed down, the locals can't afford the prices. And that's why we're seeing lots of price cuts and prices start to go down in a metro like Chattanooga, with sellers cutting the price on 28% of all listings in the most recent month. You can see that's more than double the price cuts that we saw during the pandemic. It's above what it was last year. It's pretty close to the pre-pandemic norms. And if you kind of zoom out and look at all of Tennessee, we have lots of price cuts kind of like everywhere in central Tennessee. Up into Manchester, we have 34% price cut percentage. In Lewisburg, we have 37%. In Nashville, we have 30%. So we have lots of sellers starting to get with reality here and cutting the price in these markets. One thing you need to pay attention to if you're a home buyer in Tennessee is that there's huge differences that exist exist within a city or a metro area, like Nashville, for instance, which is where I know some of you are looking to buy. Depending on where you are in Nashville, you could be in a more affordable area to buy a home with more future growth potential, or you could be in a place that's just ridiculously expensive and tapped out. Because if we look at this zip code map of Nashville focusing on home values, I want to point you guys to this, where if you look south, directly south of the Nashville metro, we have some really expensive zip codes where the typical home value is $1 million in Belmead and Forest Hills. It's $1 million in Brentwood. It's $900,000 further south there. Whereas if you go east, directly east, the typical home value is only $320,000. And so there's big differences in Nashville depending on which side of I-65 you are. And ultimately, what concerns me about some of these more expensive zip codes like 37027 in Brentwood is that the values have doubled over the last 5 years from like $500,000 to $1 million for a typical home. And if you look at the listings, you see a lot of ones like this, a 4-bed, 4-bath, 4,200 square feet for $1.5 million. There's lots of McMansions in this area of Nashville, which, yeah, they look nice on the inside. They're big, but they're so expensive. With the monthly house payment on this puppy coming in at $9,300 a month for your mortgage, taxes, and insurance. $9,300 a month, folks. That's over $100,000 a year in a metro like Nashville, which has some good jobs, good healthcare industry. There's some financial companies moving here, but there's not tons and tons of people, which means that you would need to make as a household probably $300,000 to $400,000 a year to buy that house, which in Nashville, there's not a ton of people making that amount of money, which says to me that some of these expensive areas to the south of the metro are going to continue to see price declines. And in just one second, I'm going to give my predictions for how much prices are going to go down in Nashville and the other areas of Tennessee. But first, I want to give more of a positive take on the Tennessee housing market. And the positive take is this, everyone, is that Tennessee is a state that has lots going for it. It has low taxes, it has friendly people, it has good job growth, it has huge levels of inbound migration, with the state adding 90,000 people in 2022. That was by far an all-time high. It's not sustainable. This is already going down, but you can see that pretty much every year since 1991, Tennessee has logged positive migration, more people moving in than moving out, which is a good sign for the long-term health of the housing market. In addition, while the median household income across the state of $63,000 is low, it's gone up by quite a bit over the last 7 years. So there's also some income growth coming. There's some remote workers with higher salaries. There's some new jobs coming in that are pushing incomes up, which is also good for the Tennessee housing market. Which means that after this downturn unfolds, there will be some good buying opportunities. And I believe over the long term, let's just say 7 to 10 years, Tennessee will be a good place to buy with long-term appreciation. However, first, we're going to need to see the correction happen, because right now things are just too overvalued. And the way that I feel confident in saying this is by looking at a metric called home value to income. With Tennessee's home value to income ratio registering 4.98 this year, that's a $312,000 typical value divided by $62,000 median income. What do you notice is that Tennessee, by this metric, is actually the most expensive state in its immediate vicinity here in the southeast heading to the Midwest. Like, all these areas directly above it in the Midwest are much cheaper. These areas to the west and southwest are much cheaper. Even like South Carolina and Georgia are cheaper than Tennessee. So prices in Tennessee, they've gotten a little out of hand in terms of this value to income ratio. In fact, you can see that Tennessee is now almost as expensive as New Jersey in terms of its home prices relative to income. Probably what I think we're going to need to see is this value to income ratio needs to come down closer to the long-term average, which is 3.4. You could see at the peak of the last bubble, it was only 3.2 and prices went down by a little bit. So now we're at 5x value to income. This is going to need to come down, and the likely way it comes down through home prices declining. And so how much are these prices going to decline? Well, let's go back to that overvaluation metric. Nashville prices are 31% overvalued. So what I could see happening in a case of Nashville is over 4 to 5 years, prices go down by 20% while incomes go up by 10%. That type of situation would solve the overvaluation over 4 to 5 years in terms of price declines and income growth. Meanwhile, how about a market like Memphis? Memphis is 27% overvalued, and you can see the prices there are much cheaper. Typical home price of $236,000, fair value price of $171,000. So what could happen in Memphis? Well, maybe in Memphis, values go down 15%, maybe a little more than that, and incomes go up by 10% over 5 years, and thus the market corrects. Some areas in Memphis I have special concern for are these areas closer to the urban center with very low income levels. You can see median household income of like $17,000, $29,000, $30,000. There's lots of economic, let's just call it risk factors in this area, and I suspect some of these locations will get hit pretty hard by a housing downturn. Whereas I actually think some of these higher income zip codes more to the east, like in Germantown, I think they perform a little bit better because the price prices here in Germantown and Memphis didn't run up nearly as much as Germantown and Nashville, for instance, and I think these values make a bit more sense. Also, another thing you need to watch out for in Memphis, as well as Nashville and other parts of Tennessee, is the rental market. Because one of the reasons I feel pretty confident also in predicting this downturn to continue is the fact that the rental market in Tennessee has taken a leg down, particularly in Nashville, where the rental vacancy rate for apartments has skyrocketed all the way up to 9.3%. That's a huge increase just over the last couple months in the amount of vacant apartments, suggesting that not quite as many people are moving in. You're now seeing apartment buildings across Nashville give 12 weeks free rent, which is a 25% reduction in rental costs. And so this rental downturn is a signal that, the housing downturn is probably going to get worse. And it's an issue for all these investors who bought in Nashville the last couple of years. There's lots of people who piled into the Nashville housing market in 2020 and 2021 with data from Redfin showing that the investor purchases just skyrocketed like way higher than they'd ever been. And then now you can see actually the investor purchases are collapsing because these investors see the writing on the wall, the higher interest in mortgage rates, the declining rental market. It's just not worth it for these investors now, which is another signal that we're going to see some issues continue across the Nashville housing market. But of course, I don't want to be too cynical or too bearish. I think in the long run, Nashville and Tennessee more broadly is a good place to buy, but right now is not a good time to buy because we're still at this moment where the market, it's come down a bit, but it's still very overpriced with the writing on the wall that things are going to continue to get worse, barring some like massive event like the Federal Reserve just like cuts interest rates significantly and prints money again, which could, theoretically cause home buyer demand to go back up. But short of that happening, I see Tennessee's housing market going down incrementally over the next several years. And if there's a recession thrown in there, it's going to go down even faster, probably by 20% overall is what I see the nominal price declines in Tennessee being over 4 to 5 years with some income growth mixed in. I think there is going to be some long-term pain for Tennessee because that's what tends to happen to boom towns. This is the housing cycle, folks. When an area booms like so much and so many people move in and then the builders go crazy and pull a record amount of permits, there's going to be multiple years of pain involved when interest rates go up and the economy slows down. And so one thing I would encourage you to do, if you're a home buyer in Tennessee and you want more information and data on your housing market to make a better decision, head to Reventure app. I used Reventure app throughout this video. It's a program and tool I developed to help home buyers better understand the trends in their market and make a better decision. You could look at data on home value and home value growth. You can look at inventory and price cuts, and you can really get a sense for, if home prices are likely to go up or down more in your market. Head to www.reventure.app to check out that data for free for a limited time. Head there and create an account before the paywall goes up.